What are the benefits of a family investment company? So I've been talking about them, advising on them and setting them up for clients, but what is the reason for this? What are the benefits associated? Now, just to begin, let's take a typical property portfolio incorporation, whereby the advice, broadly speaking, would be set up a partnership, wait 2-3 years, incorporate a limited company. And that would be a standard off-the-shelf limited company. And although that sorts out the income tax and capital gains tax issues arising, it does not give much regard to the longer term or very short-term inheritance tax problem that will arise, particularly with estates or assets exceeding £1 million. So this is where a family investment company can prove to be beneficial. There are many benefits, and I'll go through a few of them in this video. And the first key benefit I'd like to mention is control and flexibility. So again, a typical scenario would be grandparents transferring assets. So could be property, could be shares, investment in stocks and shares. And these assets are transferred into the family investment company, whereby other family members, such as the children and grandchildren, are also shareholders. Now, the control is retained with the grandparents, the original asset holders. And the flexibility comes into play by way of amending the Articles of Association. That's where the actual planning takes place. And by use of alphabet shares, differing dividend payments, voting rights and capital rights can be allocated to different shareholders as and where beneficial and necessary. So that's the control and flexibility. Furthermore, in terms of flexibility, as the family tree grows larger, new shareholders can always be added on, and the articles can always be amended as and where, as I say, as and where necessary. Another benefit is the inheritance tax benefit, whereby once the assets are transferred into the family investment company, that portion of the assets subject to surviving 7 years will fall out of the grandparents' estates for IHT purposes. And with the use of growth shares, any capital appreciation in those assets will immediately fall out of inheritance tax. So as I say, the planning takes place in the Articles of Association with the use of alphabet shares being allocated to different family members. Another benefit, an obvious one, a standard benefit would be obviously a company. It's a corporate structure end of the day. So the company will be subject to 19% corporation tax rates, which will be going up to 25% very shortly, but still a lot lower than personal tax rates, which can be easily 40 and 45% for individual landlords. Moreover, if we're talking about investment in shares, the dividends received will most likely be exempt for CT purposes. And just by knowing that fact, just by the dividends being exempt for CT purposes will immediately give an increase on the return on capital of investment. For property investors, for property landlords, the mortgage interest will be completely relievable within a corporate structure, and personally held, no mortgage interest relief will be available. So these are a few benefits: control, flexibility, inheritance tax benefits, corporate structure, and exempt dividends, as well as mortgage interest relief. And there are a few more benefits, but we won't make this video too long. If you'd like advice on setting up, then feel free to give me a shout, and I will be sure to assist you. I hope you found it beneficial as well.